Good morning and welcome, Patriot Radio News Hour. Joe and Jason here on this Wednesday, the 18th day of January. We are officially 2 weeks away from the Fed announcement. Yes, is it going to be a half of a point? Is it going to be a quarter of a point? Are they going to talk about a pause and all these other? But you know what the funny part is? Like they really control anything, right? This is a problem they created on their own. This whole thing about having to battle inflation caused by them themselves. Of course, don't worry, they're never going to say that because they're just trying to help all of us all of the time. But when you build a house on nothing but a house of cards, if you will, right? Because this is really what it's been built on. It's been built on this huge debt bubble that they continue to say they didn't create, that they continue to say, don't worry, everything's going to be okay. And we've lived through these boom and bust cycles now for almost the last 50 years. And unfortunately, everyone's getting ready for the next bust, but that's where we come in. You put your gold, you put your silver away. You think about go back to the 90s and with Alan Greenspan, he was the maestro. Right, and what a great job. Yes, the Fed had figured it out. Of course, all they did is create the dot-com bubble, which blew up massively. Gold hit its bottom at $250. Why? Because they thought they really did it, Jason. They thought they solved it. The debt was going to be paid off by 2010, and we were going to save Social Security, and nobody was ever going to have to worry about having sound money ever again. And, of course, now we've got gold up again, in that 1920 range, a far cry from 250 that we started this millennial in. But, Jason, I think we're just getting started.
Maybe Jerome Powell won't show up in 2 weeks. Is he
positive for COVID today?
So maybe he won't be there. maybe that's the plan, Joe. He's got his fake COVID positive test that everyone trusts, and maybe he'll be isolating that day.
Well, we'll see. Yes, don't worry. The symptoms are mild. So 800-951-0592. That is our toll-free number. Of course, allamericangold.com, the website. You can shop there 24 hours a day, 7 days a week. We've got all of our podcast feeds. Don't forget our YouTube channel. Jason and I, we're going to give away some stuff starting next week again, so make sure you're ready for that. We got news and articles to keep you in the know. Most of them, Jason, we never talk about because, the show's only an hour. And really with commercial breaks, it's like 42 minutes. You can't get it all in 42 minutes.
Yeah, you cover quite a few things each day at a pretty rapid pace. Many of the things that Joe covers, we could probably go full 2-3 segments on some of this stuff. So I think the pace you said, Joe, is pretty good with the news that you bring out. And there's definitely, even if you were doing 10 or 15 stories a day and just reading the headlines, there's probably still another 10 or 15 you'd be missing on. There's always stuff going on, and there's so many parts of the economy that you need to be aware of what's happening because it does show you where we're headed.
Yeah, we got the Dow down today. Gold's up today. We'll get to that in a little bit. We had Party City come out and file for bankruptcy today. So we really didn't even hear about Party City. And all of a sudden we wake up this morning, they're in bankruptcy. So again, the retail thing started. Let's see, it's early. I don't want to get too excited about it, but retail sales, we haven't heard a lick about retail sales. And now we know why, because they came out today. Retail sales were down in December from November, which that's not a great sign. When you take the whole quarter, October, November, December, retail sales were up about 6.7%. But when you look at what inflation was what, like 7.6, then 7.1, then 6.5. So looks like retail sales were the only reason you could say they were up was because people paid more. But when you actually look at the data today, people were buying less stuff, Jason.
Is that quarter over quarter up or year over year?
year over year. So
I
sales
I
are
can see
down
why
month
it's up a
over
little bit,
month.
Joe. I can see why it's up a little bit, Joe, because I think what was left of the free money in 2020 and 2021, I think people were, and we talked about this coming into the Christmas season. I think what was left of that money, a lot of people were saving for Christmas. So I can see why that's up. That's not going to be up year over year, first quarter of 2023.
Yeah, exactly. The problem is we're going to run into these really tough comps. It's going to be a hard number here, and again, a lot of it too was done with credit cards. Party City, the first one here, Bed Bath & Beyond, we're waiting for their bankruptcy filing. I haven't gotten anything out of Party City as far as layoffs and how many stores they're going to close. When we get that information, we'll pass it along to everybody. Then Jason, you got to remember, we got the big thing in Davos going on, a huge update from Saudi Arabia and what is going on with the petrodollar. Saudi Arabia in Davos letting it be known, hey, Saudi Arabia is ready to trade oil and whatever you want. You want to trade it in gold? We're ready. You want to trade it in renminbis? We're ready. But essentially letting it be known, Jason, the era of the petrodollar seems to be ending.
Yeah, well, I think there's a lot of dollars that are coming back home, and I think the petrodollar that's a huge one. We know that when gold was dealing from the dollar in 1971 by Nixon, they needed this fiat Ponzi scheme to get some legs under it, and that's when they created the petrodollars in the 70s. And that, let's face it, Saudi Arabia in the mainstream media, that's one of our allies in the region, but it's one of the most brutal countries in that region. The only reason they're our allies, Joe, is they do business with us, right?
We'll be back. (800-951-0592) 800-951-0592. I'll get this right. I got to keep remembering to get my mics on here. Quick look here at the markets. The Dow down 270. The S&P's down 19. The NASDAQ's down 20. Gold's up 5 at 19.15. Silver's flat at 24.05. Here comes crude oil. By the way, we're going to talk a lot about oil today. Up $1.74, 81.92. Brent crude, Jason, over 87. Unleaded gas. This is wholesale unleaded gas at 260. Get ready. You're going to start seeing gas prices rise again here. Saudi Aramco was warning yesterday, demand from China continuing to pick up here, Jason. And I think, again, this little inflation thing, this reprieve, we'll see how long it lasts. But the 10-year note got to 3.39. Right now it's at 3.40. And we know the Fed's going to raise rates here in a couple of weeks. And we're going to have a 10-year note that's a full point, maybe a point and a half below the Fed funds rate. That is not a healthy sign. But one of the reasons why you want to look into why refi, our friends at why refi, high fixed rates of returns not correlated to Wall Street. They don't care that Jay Powell's got COVID. They don't care about inflation. They don't care about interest rates or the bond market. Heck, Saudi Arabia can sell oil in anything they want. They don't care. You're locked in, guaranteed returns. Why refi? Check them out. InvestYRefi.com. Invest the letter Y, REFY.com, or call them 888-YREFI24. Remember, you got to have 50,000. That's the minimum, but check it out. You can get up to 10.25%. And Jason, starting here to get a little interesting, we had news out of Party City and their bankruptcy. Microsoft joining the tech layoff, saying they're laying off 10,000 people. And then the big news out of Davos, Saudi Arabia, saying, hey, listen, we'll trade oil and whatever we want.
Yeah, it's interesting. The old deals are no longer holding up anymore, are they, Joe? So we're moving into a new era, and I think Saudi Arabia, and there's a lot of stuff going on, and why Saudi Arabia may not want to be linked so closely to the dollar anymore. And there's a lot of pivot and moving going on in the world economy. And so this is another reason why the dollar will be getting weaker this year, along with China and Russia, and not having Japan selling treasuries. All these things are showing that the dollar, which had it looked really strong last year, is going to get much weaker, I believe, versus the other currencies. The dollar really wasn't even strong last year. How can the dollar be considered strong when gold went up against it last year, Joe? So the dollar is just right now the currency that's holding out better than the other currencies. They're all really bad. And right now, if they're all going bad, I think Saudi Arabia is looking around for other currencies to deal in.
Well, we talk about Zoltan Pozsar here quite a bit. He is a former Fed. He worked at the New York Fed, and he was the repo guru at the New York Fed. So when he's talking, right, you've got to pay attention. And of course, he brought it up last year about, hey, you know what? We're going to enter into this new type of Brenton Woods, where if you've got commodities, you're going to want to trade it in other things that are not necessarily the dollar. But it became very clear today in Davos. Saudi Arabia says they are now saying that, Russia, as an example, all Russian oil exports now are being paid in gold. And we know the Russians have been buying a lot of gold. The Chinese have been buying a lot of gold. I think it kind of lets us know. I get the feeling, Jason, a lot more central banks are buying gold than what we know of. Remember, we still don't have a clear picture of that 300 metric tons. We know China was part of it, but who else was involved? And maybe it was Saudi Arabia. As President Xi was in Saudi. Remember, in December, we covered it, signing big trade deals. China's the largest buyer of Saudi Arabian oil, and saying, that they got this new special relationship. Obviously, they're tight with Russia. They're tight with Iran. Both of them OPEC members, now getting very tight with Saudi Arabia. But in Davos today, Saudi Arabia says it's open not only to the discussions about trade in currencies other than the U.S. dollars. They were like, hey, listen, we have no issue in discussing how we settle our trade arrangements, whether it's in the U.S. dollar, whether it's in euros, whether it's in Saudi riyals. I don't think we're wavering anyone or ruling out any discussion that will help improve trade around the world. And this is coming directly out of Saudi Arabia in Davos today, Jason. And this is a big deal because you got to remember the treasuries that we have to sell every week. I mean, think about it. We're running these massive budget deficits. We're talking about, remember last year they celebrated because it was only $1.4 trillion. The deficit in 2023 is going to be much, much higher, a number closer to 2 trillion. And if things go bad, it can be even higher than that. Not to mention the Fed is selling off the balance sheet, albeit much slower than they said they were. That's more debt that's got to be bought up. And a lot of these foreign governments, Jason, they hold treasuries in order to buy things because the majority of trade still done in dollars. The biggest market by far, it's not even close. The oil market is the biggest market in the world as far as that goes. And now Saudi Arabia is kind of saying, hey, listen, you can hold whatever currency you want. We don't. You want to trade us gold? We're in. You want to trade us in euros? We're ready. Renminbis? We're ready. Heck, we'll trade our own currency.
Yeah, Joe, and I think what's going on is there's a great monetary reset happening worldwide, and I think the larger currencies, the ones that are in the IMF's basket, so to speak, those big economies, I think they're trying to get them set close to 1-to-1. That they're almost worth as much as each other as relatively possible. So I think all the buying of the gold by these central banks, Joe, is just a way that when things change, when things get switched, there's going to be nervousness. There's always, hey, we're not going to get our piece. There's always, everybody's sitting at the same gambling table, but everyone wants to make sure they leave the table happy, right? So I think the gold is just a way of, I don't think we're going to a gold standard, Joe, but I think what they're doing is, hey, the Bank of China, the Bank of Russia, the Bank of the banks that are in the Eurozone, the Federal Reserve, they're holding gold. I think when this thing gets switched, and you got Saudi Arabia saying, well, we'll just deal with any currencies. Well, they're not going to be one of the big currencies trading one-to-one. Then there'll be the lesser currencies that will trade, not one-to-one with the dollar, so to speak. And I think they want this to, their soft landing, Joe. I wonder if their soft landing that they talk about is when they change this economic system worldwide, that everybody accepts it. Maybe that's what the soft landing is. And so I really see Saudi Arabia saying, we'll just trade in whatever. Well, everyone's jockeying for position, right, Joe? And I think they're trying to get, I think since central banks all work with each other, it's a cartel. They want to make sure the amount of gold that's in each of these economies are match kind of what their size is of their country. It sure seems like the gold is going in a very equal way to all the countries that are going to participate in this new economy, Joe. It's good to bring up Saudi Arabia because oil is very, very important. But how's it going to work with currencies, right, Joe? How are you going to buy it, right?
You got that old guard, the old G7, right? And of course, obviously us. You got Germany, you got France, you got the UK, Japan. We haven't really talked a lot about Japan lately, right? We saw they had some issues with their currency at the end of last year. They've had to raise the Japanese 10-year note now at 50 basis points from 25 basis points. But that looks like, Jason, that's not going to be enough, that people are starting to really sour here. We saw what happened in the UK, their pension system starting to blow up and them losing a little bit of control. There's a lot of minefields out here, and it's going to be interesting because I feel like we've got what I'll call the non-G7s. So you got China, you got Russia, you take all of OPEC pretty much, right? This newer guard, India, Brazil, these economies that are growing, right? Because, listen, Japan's economy is really not growing. The UK, Germany, France, Italy, Spain, right? Their economies really aren't growing, and these other these non-G7 economies, Jason, that's where a lot of the growth is. And it sure seems like these guys are starting to get their act together and starting to team up and saying, hey, wait a minute, let's make our own trade deals.
Right, Joe. We'll see how that goes, right? I'm getting the sinking feeling. Well, I'm getting the sinking feeling the dollar is still going to be the world trade currency for a lot longer than people think. I know that everybody's calling for the yuan and China's economy to overtake us. I just see a new world economic system, something that we have that people aren't really talking about. Because let's face it, the guys that make all the decisions, they feel like they own the whole place anyways. So what does it matter if it's China or if it's the U.S. or if it's Russia or somewhere else, Japan or India? I think they're cutting up the pieces of the pie a certain way, Joe, and I think there's not much we're going to do about it except for the fact that the small guy that has no decision-making power when it comes to this stuff, we have to live by this. And this is precisely why we sell gold and silvers, to help protect you against the tidal wave of crazy economic news that's getting ready to come and change our world.
Yeah, and this is just a fact. Listen, the dollar's not going away. Well, it may be an electronic dollar, right? A central bank dollar. It's not going away. The problem that we see now is more trade is going to be conducted in something other than dollars. Let's just say, I don't know, just 5% or 10% of the world trade all of a sudden shifts away from the dollar. That's a huge, huge ramifications, only because we have so much debt that we need to sell. It's just simply, hey, if you trade in other things that aren't dollars, you need less of them, period. And this is a really interesting time because we built this huge debt machine that really was predicated on, hey, everybody uses dollars. And I think listen, let's not kid ourselves. A lot of it has to do with, hey, we bullied a lot of countries, right? Hey, you don't want, you're doing things we don't like. And then the United States comes in and makes life hard on you. And now these countries are like, well, you know what? We've got a way around it, right? We'll just stop using it, Jason.
Yeah, no, that's exactly right. I think that we're going to be seeing, like, it's going to happen. Things are going to change rapidly. You've got to keep your eyes on it, Joe, because what's going to happen in the future is going to have huge ramifications on America. It seems to me that America is going to be paying higher prices for things, and this is going to be a permanent situation for America. I think our inflation, Joe, it's going to be hard to see 2% from here on out, because if Saudi Arabia doesn't want dollars, and China doesn't want dollars, if Japan doesn't want dollars, Russia's already, I think, completely out of dollars. They're going to go somewhere, Joe. They're still existing out there, right? And if there's too many dollars for so many items, items in the economy, the prices will just keep going up. So just keep watching those food prices, Joe. I don't think those are coming down any day soon.
Well, we'll see how it all works out. Some other economic data, the New York Fed, they had their their manufacturing survey, a huge collapse, a 22-point collapse, negative 33 now. That was twice as bad as estimates. New orders continued to fall. And then producer prices, the inflation thing. Prices plunged the most since the COVID lockdowns. Kind of a little breathing room for the Fed. We'll be back. $800-951-0592. We got rolls of silver quarters. We started that sale yesterday at $200 a roll for 40 silver quarters. The $20 Liberties 1 through 9 at $21.50, 10 or more at $21.35. And Jason, we had some Fed speak out today. We'll get to that in a minute. But we had what we'll call the producer prices, wholesale prices, down 0.5%. So this is this inflation falling category here. Now, most of the decline was gasoline prices on the wholesale side. As I already said, by the way, oil now above $82. I think we've seen the bottom in gasoline prices. But prices for final goods moved down 1.6% in December. That's the biggest drop since July. A major factor in December's increase for prices, where there was prices jump in margins on fuels and lubricants. I would say the other things that oil is used for, Jason, got more expensive.
Yeah. And here's the thing is I even was watching the mainstream media news. Sometimes I turn my TV on and either the national or the local news is on when I'm getting ready to watch something else. And they were talking about 6 straight months of lower inflation, just clapping their hands, Joe, right? And you're talking about the prices of things going up. When inflation is going lower, you still have inflation. There should be no inflation. Inflation is a dirty trick that those that are empowered play on those that serve them. And lower inflation, 6.5%, and they're throwing a party. That's horrid. That's 3 times the level that they wanted at. And then the level they wanted at, they do really fine. They do really good on that 2% that they used to have their mandate on, Joe. So what you're talking about, those prices going up, that's not stopping anytime soon. I saw the reports of eggs are completely out of, there's just no eggs anywhere, right? And they did say, well, it's just the avian bird flu. It's just so severe this year. It's so severe. Well, I get the feeling there's a lot more than that, Joe. There's a lot more to the egg shortage than bird flu. The inflation has a lot to do with it. And then, of course, government monkeying around with the rules on things makes it so that there's no eggs available. These kinds of shortages that Joe talked about yesterday, I think we're going to see a little more of those things going on, Joe, as things get a little weirder every single day.
Well, and again, the Unilever CEO said, "Hey, we're still raising prices.
Yep.
They may say inflation has peaked, but prices haven't peaked." So, just something to keep in mind. Federal Reserve St. Louis Fed James Bullard was out on TV today. He's a non-voting member. So remember, not all Fed governors get a vote. This year, Bullard does not have a vote, but he says that he doesn't want to see the Federal Reserve stall or pause on rates. He's been very, very clear that he wants the rate to be between 5 and 5.25 before the Fed pauses. If that's the case, he's essentially saying, Jason, 50 basis points in February, and then either another 25 or 50 in March before a pause. But even that, Jason, really bullish, because he's acting, and they like to do this. These non-voting members, they'll play with the opposite side of the voting members. That seems to be what they do. So he's out there acting tough here. And if that's the tough stance from the Fed, that, hey, we're going to be done raising rates in March, this really is setting up. This is, again, playing right into, you're better off buying gold and silver today than you are, say, tax time in April.
Exactly, Joey. We were talking briefly about this morning, especially since I've been on with Patriot Trading, and I think this might be generally a year-over-year thing anyways. I think a lot of people get their tax returns, and people that want to save some of that money, they'll buy gold and silver in April or May when they get their checks. This may be the time that you really want to buy this stuff now. There's not as much buying of gold and silver right now that there really should be. Gold and silver should be hot. People should be buying like crazy right now. And unfortunately, as gold has been moving the last couple of months, it's going to keep moving. And by the time you do your tax returns and get your tax return check, put in your account, or if you get a paper check or whatever, you're going to be paying a lot more for it in April and May. I'll just guarantee that. You're going to see a lot of movement in gold and silver. This is the time to buy. Any way you can finagle it, Joe, if you can get that money now and pay it back later, that would be a good way to do it, because you got to get it when the price point is much more to your advantage. So that's silver or gold, Joe.
Well, we gotten lucky, really, and I know, right? You're like, well, wait a minute. Gosh, gold's up $300 in the last 8-10 weeks. Silver's up $6 in the last 8 or 10 weeks. But really, it's not. And what I mean by that is the premiums just came in. So
Yep.
you're buying it really at the same price as you were 10 weeks ago, and so it really is a great time, at least because, listen, Bullard is setting the benchmark here that if he had his way, I want 50 points in February, which is in 2 weeks, and then 8 weeks from today in March, I'd like 50 more, and then let's call timeout. So either way, I think what we're going to see, Jason, is the Fed is going to start talking what? Because you know how they love to talk. They can't help it, right? We got to have press conferences. We got to be out in the media. We want to pretend. We got to give people the illusion that we know what we're doing and we control the narrative. But the narrative is going to be that rate hikes are going to be coming to an end in the next 10 weeks. That's what James Bullard said today. Rate hikes are going to come to an end in the next 10 weeks. That's where they stand right now. Now, obviously, they have the right to change their mind, but that looks like what they want the narrative to be, which means they're going to start talking about this now. And just the talking of that is going to lower the dollar, right? We're going to see a lower dollar. We're going to see higher gold and silver prices.
Yeah, Joe, and they rose those rates, even though it was very quick how fast they rose the rates last year versus other rate hike cycles recently. They were pretty gradual, up a quarter point, up a half point, up, 3/4. They didn't just go right to 3/4. The fact that they backed down a quarter point from the raise from the previous meeting, I don't think they're going to drop off from a 50-point rate hike. I think they might go to 50 and then down to nothing. But I think 50-25 and nothing, or down to 50 and nothing. I don't see them doing 50 and 50 and then dropping to nothing. That's not what they're going to do, Joe. I disagree with that completely. I think James Bullard is being a little conservative.
We're going to see what happens. 800-951-0592. Silver quarters, $200 a roll. $20 gold pieces, $21.50. 10 or more, $21.35. Jason and I will be right back. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour. Bank of America now the latest, telling all of their clients, hey, we like gold for the next 3 years. Why do I get the feeling, Jason, when those 3 years are up, they're going to issue another one? Hey, we like gold for another 3 years. Saw a report out that half of the vehicles sold in the United States by 2030 will be electric. I think that'll put the entry point at about 100,000. And then if you actually want any options, I mean, you can be paying them $200,000 for a vehicle, Jason. I just don't know how all this is going to work with all of this ESG and all of this other nonsense. BlackRock, Larry Fink is in Davos, of course. He was out on TV, on Bloomberg TV. Jason, you should have seen it. He was crying about, some of the states like Texas are going after BlackRock for their ESG investing. And he was out there crying about it and saying that the narrative's ugly. The narrative is creating this huge polarization and that the attacks are starting to get personal against me and all of this. Jason, it's really, really clear that inflation isn't going away. To your point, they keep this nonsense about 2%. We cannot have 2% inflation if we don't have cheap energy, Jason. It's just not possible.
Yeah, think about it this way, Joe, and it seems hard for the average guy that's paying attention to this to understand. If you have to put it all together, it's like, how are they going to get all these cars to be electric by 2030? They barely can keep the electric grid running the way it is. And the way you do it is you have to come up with more resources if you're going to push the population into some new form of society, this being, electric cars versus gas cars. Let's just stick with that. What you do if you're the guy that pulls all the levers, so to speak, and makes all the decisions, if you really want to push this narrative to, hey, we're going to go all electric, this is where we're going to have ESG scores, because ESG scores in digital currency, this is how we control everybody. So we got to get this climate change emergency to be the number one war that the planet fights. How do you do that? Well, it's kind of what a drill sergeant in the military or a teacher in school would do. What does the drill sergeant do when you got that one guy, that one recruit, or that one guy that joined you? He's just not doing it. He's messing up. He doesn't really care that much. He doesn't go and beat the crap out of him and beat him into submission so that he does what you want. That takes a lot of energy and time. He just makes the rest of the unit do push-ups until everybody hates that guy screwing up, right? That's what's going to happen with ESG scores and digital currencies. To get their control system in place and have everybody using electric cars, they need more resources. So how do you get more resources? You get the people living a higher standard of living, let's say the United States, and you put the pressure on, let's say, African countries and other countries that have the commodities and the things needed to build this system. How do you do that? Well, you give them inflation. You give them hard times. You make their life not so convenient and comfortable. And then suddenly there's not a lot of Americans and comfortable nations that are so sorry and worried about African nations and third world countries having to put cobalt on their back and walk it by hand to where they need it for making cars, Joe. I think they're going to be able to accomplish this, especially if ESG scores take root and the digital currency is put into place like it's going to be. This climate change agenda, which is totally unnecessary, is going to come to fruition, Joe. Lords and peasants, we are heading for economic times that are going to be very, very painful for a lot of people.
And I think, listen, we're going to see a ramp up in government spending here. I mean, Larry Fink, he's out there trying to save the narrative of ESG. Listen, we're talking We spent trillions and trillions and trillions of dollars. People have invested trillions and trillions and trillions of dollars. And has it changed anything? Right? Think about it. We put all these solar panels, these wind farms, electric vehicles. It hasn't changed anything. And then John Kerry was in Davos. Remember him, the ketchup guy, right? Well, he married the ketchup heir, right? He's pretty smart, right? If you're gonna get money, might as well marry it, right? That's the easiest way to become wealthy is marry the money. But he was out there. He said we need money, 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 money. He said money 7 times in a row. And why do I get the feeling, Jason, as we get into this recession / depression, this next economic crash, this boom and bust cycle? Listen, I didn't create the boom and bust cycle. Don't be mad at me because I'm telling you that the next bust is coming, right? It wasn't my doing. It all lays at the hands of the central bankers here, Jason. But I already can tell you, I can feel it in my bones. They're going to come up with these huge spending packages. It's going to be loaded with ESG pork. We're going to run deficits $3, $4, $5 trillion, I guarantee you.
And liberal socialist type of Americans are okay with this. They think they need to save the world, right, Joe? I mean, I don't do video games on my phone, but I was doing one of those little games, you know, the so-called free games. They say, oh, hey, free games. It's not free because they have all these ads loaded in for you to keep playing the so-called free game. And in those ads, every time they want you to play more games, and it's always, I don't know, have you seen these, Joe, where it's like you got the woman that's freezing and you got to go in and play the game and give her a coat and give her a way of fixing her house. And it's you saving this poor woman who's freezing, right? And it's games like that, which is teaching you, oh, you need to use your resources to help other people. You're here to save the world, right, Joe? This is how they're going to do it. They're going to get bigger. You know, they don't really need the average guy just working the 9 to 5. They don't need all his money, but the things he puts his money into, the companies that are pushing solar and pushing wind and all this other stuff, they need it. Hey, pay more now, but we're going to save the world. We're saving the world. You're going to feel good about yourself when you pay more for this and pay more for that because you're saving the world, Joe. This is how they get everyone, right? This is how they get people to believe in climate change and all this garbage. Hey, everyone needs to do their part. Just not anybody that's a billionaire and in the big club, right?
Yeah. Well, again, hey, I'll say this: I'm all for it because it's actually going to drive gold and silver prices to record highs because it's just going to make everything so much more expensive. 800-951-0592. Final segment coming up. 800-951-0592. Rolls of silver quarters, $200 a roll, below $28 an ounce right now. Silver's at $23.86. $20 gold pieces, 1 through 9, $21.50. 10 or more, $21.35. You got gold here at $19.11, $19.12. Jason, you're almost approaching just $200 over spot for $20 gold, especially at this price point. It's just great. I love the fact that you're getting that close to spot again because that seemed to be gone for the last several years.
Yeah, and you said that it'll be short-lived. I don't know how short-lived it'll be, but I get the sneaky suspicion in a couple of months. As you said, Joe, the premiums might go back up, especially if demand just starts pushing. And I think demand is going to keep pushing. You got an opportunity. If you're listening to this show, you have an opportunity to buy silver today at an extremely good price. You have an opportunity to buy gold at an extremely good price, and it matches all income levels. I know that not the average guy, he might not be able to plunk down over $2,000 to get a piece of gold today. You may have to save up longer to get that. But when you got silver quarters at $200, that's in most people's price ranges. Now, if you're not even in that price range, there's not a whole lot I can do for you. I'm just telling you, just go out there and kick some butt and get into the position where you can buy silver. I know that once in a while, Joe, I talk to guys like they're so frustrated because they want to buy more and they want to buy more. And I get that. At one point, I was kind of in that situation. You just have to just be disciplined and you got to put that money away. And our metals program, well suited for even a lower ability. If you $100 a month, half of a roll of quarters. You put that $100 away in the metals program, Joe. Every 3 months, we're going to get you $300 worth of metals. And that's a good way to get started if you can't even buy the roll of quarters today. But regardless, Joe, everybody else, get some quarters and get some gold $20 Liberty today.
Yeah, and again, I think the longer term here, we're talking short term, right? We're saying, hey, we really like gold between now and tax season. And then you hear things like Bank of America. I mean, and all the financial institutions, because here's what they're saying. Hey, the only thing that wasn't really attractive last year in gold and silver was the ETFs. The ETFs, it's attractive now, so money's flowing there. You know what? I didn't even get to it. The Royal Canadian Mint, that's the UK Mint. Jason, all-time record high purchases in gold and silver from the UK Mint as well. Demand globally is huge. And all of these things, especially what's going on with the Fed and the rate hikes, Bullard today kind of saying, hey, the Fed at most wants to be between 5.25 and 5.5. So they're only a point away, a couple of meetings away. And that's the best case scenario. That really isn't a very strong dollar mentality. And I think it's wishful thinking that they've got inflation under control.
Not only do they not have it under control, Joe, it's actually a part of their mandate. They just want to have it. They created the situation we're under currently, and they are going to be the masters of where it goes. And I think 2% is in the past. I think that they're getting us used to a higher level of inflation, which, Joe, that just means there's going to be more have-nots and less haves. You want to be in the have category. You want to be a lord. You want to stack, just like Joe said for years. Be your own central banker, right, Joe? And 800-951-0592. That's the first step, Joe.
Yep, put it away. Jason and I were coming right back with the half-empty cup. Go to 1360khnc.com and pick us up on the stream there.